as unfair as it seems, the things that are going on politically in the world. Everybody goes through this in their life. Everybody has to live through a period of the world being a really screwed up place. It's a question of what age you go through it at.
Welcome to Future Skills, where we prepare you for a future of accelerating change. I'm Ludvig Sunstrom.
And I'm Macrovoices Syding. In today's episode, we talk to Erik Townsend about investing, career, education, technology, and authoring. Erik is an excellent example of a constant learner. What ultimately drives him is understanding the fantastically complex puzzle that is life, much like how it is for me and Ludvig. Erik made a fortune from founding a software company that he sold when he realized that the parabolic trend in valuations for IT companies was becoming unsustainable. He then tried to retire to a yacht in the Caribbean, but he failed spectacularly in that endeavor. Instead, he went on to reinvent himself as an investor, a hedge fund manager, and a podcast showrunner. Like myself in the beginning, I think most people know Erik as the host of the podcast Macrovoices. In his podcast, he talks, among other things, about his interest in the term structure of oil prices, about gold, about the fourth turning that we will talk about later, and the future of the US dollar. But in today's conversation, we also learn that he has more plans ahead, including writing a handful of books on a wide range of topics. Now, keep walking and enjoy Erik's pedagogical contemplations and recounts. You have come across as a constant learner. You started as a software entrepreneur, and then you became an investor and a macro student, and now you are a podcast host, and you're also writing a book. So you keep evolving. But can you just provide our listeners with a brief background? Where were you born? Where did you grow up? Just to understand where you're coming from, what platform you're building from.
Sure. I grew up. Well, I was born in New Jersey, and I grew up in Concord, Massachusetts, just west of Boston. And you're right. I'm just trying to think about how to answer the rest of that question. The constant learning part is such an important part of life, and I don't know how to describe where I picked it up, but I think most people grow up with this idea that learning comes from schools and it's required and you have to do it. And since schools are so bad at provoking learning, it's usually an unpleasant experience. And once people are done with the compulsory part, they don't want to do it anymore. And I think that schools don't have that much to offer, but learning's the best thing going. And if you can organize your life around learning as much as you can and being fascinated and pursuing what fascinates you, I think it leads to a much more rewarding life.
All right. The first thing I heard about you was your podcast, Macrovoices. I actually found it after only just 1 or 2 episodes, I think. So let's start there with investing. What is your investment philosophy? What do you focus on? What type of trades? What type of situations? What type of analysis?
Well, it's changed quite a bit over the years. What I started with, and what I think is probably the best place to start, is you've got to pursue something that is personally interesting to you, because if it's work and it's unpleasant, you're not going to do a very good job at it. You've got to find something that you're passionate about. And I started getting interested in issues that were of concern to the future of the world. What's going to change the planet that we live on? I want to learn about those things because I'm fascinated by it, and if I can learn enough about them to be intelligent about making trades based on them, I'll do that. And the thing that I first became really fascinated with as an investment theme was peak oil. The prediction that the ability to extract oil from the earth would be smaller than the amount of consumption required, and that would result in imbalances in financial markets. And it was really because I'm interested in energy security and the future of the world that I had plenty of energy to learn about that. What I've learned over the years is it does make sense to pursue high-level themes like that you can find excitement and interest in, but it's very hard to trade them in a tradable time horizon and make money from it. So what it's led to for me was kind of a shift to, okay, I'm interested in the oil market because it's fascinating to me to follow that from a future of the world standpoint, but let me look for more tactical opportunities of understanding what's happening in the market. And I ended up focusing on a lot of strategies that had to do with the term structure of how Brent and WTI crude oil trade in with differing relationships from one contract month to the next, having to do with the way storage works in the U.S. and how it's different from the way the Brent contract works in Europe. So it was something that started out of a fascination with what makes the world tick, and then it led to an understanding of more technical aspects of the market. The other thing that I've found as I've gotten more experienced is that it's what I call knowing your place. If you look at, a lot of people make the mistake of thinking, I want to do what the big boys want to do. I need to learn to trade like Warren Buffett or George Soros. That's the last thing you want to do. Those guys are extremely restricted because they're running so much money. They can only trade in certain markets like foreign exchange that are so big that they can absorb really, really large trade sizes. If you're a smaller investor, there are much easier ways to make money in markets that wouldn't be able to absorb the amount of capital that those guys are pushing around. So you don't want to try to be like Warren Buffett. You want to figure based on your own asset size where your best opportunities exist. And I've learned to focus on looking for trades that are a little bit too sophisticated for the average retail investor to understand. So I have an edge because at this point, a professional amount of knowledge of markets, know how to do certain things. But I look particularly for trades that are capacity limited and that hedge funds don't bother with because there's not enough room in them for the guys that are pushing several $100 million around to be able to make money. And so I look for that niche where it's too sophisticated for the retail guy, but not big enough in terms of capacity for the hedge funds. And I think that you can use that technique to ferret out trades that have a lot of return potential that nobody else is looking at.
When you're talking about trading the term structure, if I understand that correctly, it's you measure the level of contango or backwardation, and you make prediction on how that level will change, the size of the contango, for example.
Yes, that's right. And it's different in different markets. What happens is the backwardation further out on the curve, let's say a year out into the future, is really a measure of future expectations about supply and demand balance in the marketplace. If you look, at least in the U.S. market, and this has changed, by the way, in the last year or so, but before export of U.S. crude oil was allowed, it was previously outlawed, and it's now been allowed. Previous to that change, we had a dynamic where it was a different set of factors, really driven by the availability of storage in Cushing, Oklahoma, that was determining what's going on with crude oil spreads at the front of the curve. So the difference between the first month and the second month had everything to do with inventory level in Cushing, Oklahoma, and nothing to do with market expectations around supply and demand. If you looked at what's going on a year out on the curve, it was entirely about the supply and demand and had nothing to do with Cushing, Oklahoma. What you could do is look at divergences in those patterns and say, okay, I can see that there's a lot of contango at the very front end of the curve, and it's because of storage conditions, and there's storage conditions that I expect are going to persist, but there's a lot of backwardation that's a year out. Now, that's a perfect example of a capacity limited trade, because if you're talking about what's going on in the first and second and third and fourth months, all the big boys are trading those very actively, and there's people with better information than you that are trading in those markets. If you're looking at a strategy that I was looking at, which is what's going on a year and a half out on the curve, and how does that compare with what's going on at the front of the curve, and is there a position I can put on a year and a half out and sit on it that is going to predictably evolve to where other factors are influencing it, and I can tell it's very likely for that spread to move in a certain direction if I wait it out over a long period. First of all, most big hedge funds don't have the time to wait. Second of all, if they did, the liquidity that far out on the curve isn't big enough. As soon as a lot of people started trading that strategy, you'd consume all the liquidity and the trade would be arbed out of existence. So for a smaller trader not running hundreds of millions or billions of dollars the way some of the funds are, I can trade a year and a half out on the curve, and that's a perfect example of something a retail trader probably wouldn't know how to do. And so that was an example of a trade that worked very well for me, and it all comes from not trying to be Warren Buffett. It's looking at what can I do with the knowledge and capital that I have that other people don't know how to do.
How do you deal with all of these complex patterns? Because when I listen to your podcast, Macrovoices, I'm a bit taken aback by the different kind of topics that you discuss with guests, and it's often very big picture concepts, and you take all these different things and you put it together into a narrative that makes sense. So I'm wondering, what kind of skills from your background do you think have equipped you with the ability to decipher these big picture macro events?
I think it's more fascination with their importance to the world. The way I became interested in macroeconomics was reading first in Jack Schwager's Market Wizards books about Jim Rogers, and then reading Jim Rogers' books. And, Jim's personality is just so blunt and direct, and he's a guy who tries to figure out what makes the world work and what is going to determine the future course of society and humanity, because it's fascinating to him, and it's fascinating to me for all of the same reasons. He describes how early in his career he was just absolutely obsessed with history and learning about what makes the world work. And he was shocked when he found out you can actually make money on this, studying what makes the world work. There's a way to translate that into an investment philosophy that you can make money from. Holy cow, that sounds like so much fun. And it's fun for me too. To understand macroeconomics is to understand the biggest and most important puzzle that has ever existed. And it's the puzzle of what makes the world work. I think understanding it through an economic lens is the best way to understand it. If you understand macroeconomics, you can predict what the major trends in the world are going to be. And you see that the politics and a lot of the things that we hear about really just fit into a financially driven narrative, which is controlling the world. And there are parts of it that are corrupt and not good for society. There are some things that are good for society. But if you can understand it, whether it's good, bad, or indifferent, and learn to anticipate what things are going to happen and learn how to translate them into investments, it's the most fascinating, interesting thing that I know. That's where I started. And what I found was, something like peak oil is a prediction that occurs over a period of years. And as I was getting more and more interested in the oil market, I guess it's just my background in software engineering and looking at patterns and looking at data. I was looking at the shape of the term structure chart from month to month, and I was saying, hey, there's always a certain pattern that there's more likely to be backwardation in the middle of the curve, and there's more likely to be contango at the front of the curve. And of course, it doesn't always have to be that way. But I just said, how could this statistically, continuously be biased in the sense that there's usually contango at the front of the WTI curve, and there's usually backwardation in the middle of it? And I looked at a bunch of historical data and realized that there was a pattern there, and started to develop a strategy to trade it. So I guess I never really thought about it, but because my background is in software, the idea of going and buying 20 years of market data from the exchange, which I did in 2013 when I first started looking at this term structure trade, and analyzing it with database analysis tools and so forth. I guess most investors, don't have the skills without trying to go do something like that. Analyzing data is what I did for my whole career in the software business. So it came naturally to me, I guess, to look for patterns in data and to know how to use computers to analyze data in order to verify my hypothesis about what those patterns were. So I guess having computer skills helped, but it was mostly being fascinated with what makes the world tick. And my interest in peak oil was really understanding where we're headed in terms of the economy and geopolitics if oil became more scarce.
And you've also had Jim Rogers on your show, right?
Yes, Jim was our very first guest, and I think I've had him on the program twice now. And he's an absolutely fascinating man. His perspective has always fascinated me. And I think one of the things that when people ask me about investing, and they'll ask me, well, who's your role model? Who's the guy I should look up to? And I say, okay, right there's your mistake. You're doing the right thing looking for your role model. Don't ask me who my role model is, because you need to figure out whose style jibes with your own personality. And what I recommend is reading Jack Schwager's Market Wizards books, which is a compendium of long-form interviews with the most famous traders and investors in the world. And it's not because there's one guy. Jim Rogers is the one that I particularly resonated with. It's because you need to find your Jim Rogers, the guy that you really resonate with. Some of them are very high-level guys like Jim who look at the world overall, and they really start from a very top-down, what's going on politically, where's the world headed, how does that lead to my investment decisions. There are other guys that are math geeks that just don't want to try to understand any of that. They're looking entirely at some very focused inefficiency that exists in whatever it happens to be municipal bonds and differences in their trading structures or something. And they're doing some calculus equation on who knows what. It's a question of finding that style of trading or investing that resonates with your own personality that's going to be rewarding to you. And I don't know of any better way to identify that than reading Jack Schwager's Market Wizards books, because you just get a sense of the personalities and style of dozens of different really super famous and successful investors.
I would like to add the book More Money Than God as well here. Have you read it?
No, I've heard of that book, and I should have read it because I've heard so much about it, but no, I haven't.
It's absolutely amazing, and it's really an updated version of Market Wizards, I would say. It's a run-through of all the loopholes that various hedge fund managers has found in the market at various times. I definitely understand your fascination for big picture stuff, but I'm simultaneously a little bit surprised that you, with your software background, that you rarely talk about investing in technology stocks. Do you do any investing in tech stocks, and if not, why do you shy away from them?
Yeah, it's interesting. I started with the idea after selling my software company that I wanted to be a venture capitalist. And what I didn't understand at that time is that venture capitalists don't do what I thought they did. I assumed that venture capital was all about who's the smart software guy with the smart idea and being able to look at business plans and think about who's got a good idea and who's got a dumb idea. That's really not what venture capital firms do. Venture capital firms look at going businesses that somebody else has already funded the seed capital to get them started, and they look at the quality of execution, and they don't care if you're dealing with a really good idea or a really dumb idea, as long as you're making money at it and you appear to know how to develop a market. They help you grow your business, and they're focused much more on the financial numbers than the story of whether the idea makes sense. The investing on who's got the smartest idea for the next hot software company, really angel investors do that. And angel investing is a fascinating world. I dabbled with it a little bit, and what I found was that it was very frustrating because all of the entrepreneurs are extremely protective of their ideas. They're convinced everybody's trying to steal their idea, and they have to be super secretive about things. And they're generally not very welcoming of help when it's like, look, young man, I've done this before. I've started a software company, sold it, and retired in my early 30s with enough money to be retired for the rest of my life. There's a chance I might know something more about this than you do, and maybe I could help you if you would listen. It's very hard to get through to these guys. They're very, very focused on what they want to do. They see angel investors as a nuisance that they wish they didn't have to deal with, but they're desperate for money. And it tends to lead to a relationship between investors and entrepreneurs, which is often challenged. And I don't like that kind of energy in my life. I don't like being frustrated that the guy said he wanted help in order to raise money, and then as soon as he's got the money, he doesn't want to talk to the investors anymore, and he's going and making a bunch of dumb mistakes. And I know they're dumb mistakes because I made them myself when I was his age and wasn't listening, just like he wasn't listening. And I have to go back to my early career. I didn't want to listen to anybody else either and let them tell me how I should run my business. I think it's a natural part of what goes into building software companies, is people that are good at it tend to be very set in their own ways and not really looking for advice from people that have done it before. So I found that culturally, the social experience of working with young entrepreneurs starting software companies was very frustrating. And also a lot of them were very, very convinced that they had brilliant ideas when they didn't. And when they did have great ideas, there was way too much money chasing them already anyway. So I found that kind of investing didn't really satisfy me, and I stopped thinking about technology investing for that reason. And it's the same phenomenon, I think, when the whole cryptocurrency thing started to go crazy. Everybody I knew said, Erik, you're so perfect. You've got a background in distributed computing. You must know all about this. And I said, well, that was my first career. My second career tells me that governments have never allowed other people to coin money. This cryptocurrency thing is not going to last in its current form for very much longer, and I see it as a waste of time. So there have been things that have been technology crazes that I haven't pursued because I could see through them and didn't really think they were worthwhile. And there are other cases where there might have been opportunities, but it was too frustrating for me to deal with that whole angel investing world. And certainly some people find it to be incredibly rewarding. I'm envious of them. I think you have to have a very hands-off kind of, I'll believe in this guy that I like his style, and I'll just step back and let him do it his way and not worry about the fact that he's not doing it my way. I think maybe I'm too much of a control freak for that. But angel investing was not for me, and I think that's really where the opportunity would have been in software-related, pursuits.
Speaking of cryptocurrencies, like you said, it seems kind of obvious that the governments wouldn't really have any incentives to let that go on. But what kind of forces do you think did take the cryptocurrency into like a critical mass where it, raised in value so much over the past 2 years?
Well, I think that what has happened with cryptocurrency is, first of all, you've got an idea that most people don't understand. I think that if governments understood that the goal of Bitcoin was to design a money system that was built from the ground up with one express design goal, which is to make it impossible for governments to do things that government thinks are its job, which is fighting terrorism by monitoring international financial transactions. They wanted to create a money system that was immune to government monitoring, oversight, and control, that used encryption technology to make possible independence from government, and they designed it to make it impossible for government to shut it down by having no central point of control or administration. I think that if it had been clear to governments, if governments were not so slow, bureaucratic, and inefficient, and they'd understood that that was the objective, they never would have allowed it to occur. But, it's some high-tech thing, and the young people are getting involved with it. Well, the way that it works is you have to have the blockchain has to be basically policed by a bunch of volunteer cops. I shouldn't call them volunteers because they get paid. They're called miners, and they get paid in Bitcoin cryptocurrency for doing some very compute-intensive operations that secure the blockchain, called mining. Well, what happened is, who can actually do this? You've got to have a high-end computer, and somebody figured out that it's actually not the CPU in your computer, but it's the high-end graphics card in the computer, which is most suitable to solving these cryptographic math problems that go into this process of mining. Who's got those computers? It's millennials with big gaming computers, the guys that have 4 graphics cards bolted together in order to run the fastest virtual reality games. Those are the guys that already had the computers that all they had to do was get this Bitcoin mining software, press go, and they're literally, mining for gold. They're mining digital money by using their gaming computer to create money out of thin air. And in the early days of Bitcoin, when it was not very competitive, you could mine a whole lot of Bitcoin. And there were people in their mid-20s who took their gaming computers and became multi-millionaires just mining Bitcoin. You start doing something like that, and it catches on. And remember that the millennial generation has a lot of people who are either not employed or are dissatisfied with the level of employment they have. And your friend's figured out some new program on his gaming computer that literally prints money like a printing press. You want in on it. And so I think it really, really took off because it gave the millennial generation something it could identify with as sort of its own. A lot of people didn't understand what it was, and a lot of millennials got interested in it and saying, wow, this is something that I can just run on my computer, and it's creating this really cool new money system that's independent of central bankers. And I get it for free just for being part of this police force that keeps the blockchain secure for everybody else. I like that idea of, I'll sit around and basically do nothing and let my computer make money for me. That really worked well for a little while. And once it caught on, of course, it became so competitive that these days, if you mine for Bitcoin, you're very unlikely to recover your electricity costs because it's that competitive. But in the beginning, people were mining all kinds of Bitcoin. And of course, they got in early when Bitcoin was cheap. And as Bitcoin is appreciated, it only takes a few of those stories of somebody, a friend of a friend who became a millionaire mining cryptocurrency in their spare time that you want in on it. And I think that's why it became such a craze. And unfortunately, it led to a Dutch tulip mania style speculative craze in, people, You've got these Bitcoin tokens, which are redeemable and exchangeable for exactly nothing. It's bits and bytes in a computer network that has no real representative value. It's not exchangeable for anything. It's not redeemable for anything. It's only good as long as somebody else happens to want one of these things called a Bitcoin token. And they went from less than 10 cents to $19,666 in a matter of a few years. That was not because there was a price appreciation, it was not because there was a value appreciation. It was a price appreciation independent of value. And of course, as you know, what happens in speculative manias is novice investors see rapidly appreciating price and they misinterpret it as an indication of rapidly increasing value. And a whole bunch of people made the mistake of confusing value and price, and we had a speculative blow-off. I'm not even sure it's done yet. Right now it looks like that 19,666 is awfully high compared to whatever Bitcoin is today. I don't know that it's done yet, and I am shocked that we've gone this far and governments haven't even figured out what it is. But if you listen to what the central bankers are saying, it's very clear that they don't understand how it works or what it's for. They don't get that these libertarians that have created this currency system for the purpose of circumventing government are coining their own money, and that it really is a bona fide money system. The central bankers just don't get it. They don't know what's going on. So I think it still has some life left in it, despite the price pullback that we've seen already.
I think that's a fantastic explanation, and it really makes sense to me. And I think you could also add that, speaking of what you're saying about these being millennials with gaming computers and so forth, I think it's not unlikely to consider that who usually sits on, for example, gaming forums, underground forums, social media, where these kind of things have the potential to spread like wildfire. Well, it's exactly these kind of people. So that could be like an amplifier to what you're saying. And that could also explain how it was able to spread so rapidly once it was in progress.
Well, I think the real answer to how it spread so rapidly was the price appreciation. When you first heard about Bitcoin and your super geek gaming kid down the street that is doing nothing with his life but being on gaming forums says he found something cool, you just roll your eyes. 3 weeks later, when he drives by in his Lamborghini and laughs at you, you're wait a minute, what? What did I miss out on? And I think that it was the very visible creation of wealth that occurred very, very quickly that got so many people excited, and it became self-reinforcing.
I think somebody who's new to investing can find it a little bit daunting listening to you. I mean, you are trading far out instruments in the oil market, and you talk about macro, and you can reason like this about the Bitcoin without even investing in technology anymore. So you know all that, and you don't even use it. So my question here is, what would you advise a beginner, an investor beginner? How should they start investing, apart from what you said about market wizards?
I think that you've got to start by deciding why you want to be involved in investing in the first place. I don't think that there's ever any free lunch or easy way, you're going to spend 20 minutes a week and make a 40% return on your investment. That just never ever happens for anybody. You've got to find something that you're fascinated with and interested in. And I think it's Peter Lynch famously used to say, you invest in what you know, because what you know is what you know better than the other people that are investing in it. And if you are, personally just more interested in hang gliding than anybody you know, and you know more about that sport than anybody, well, then starting to learn about the companies that are active in that space and what they're doing, you're going to have a lot more insight than some investor on a institutional desk on Wall Street is going to have into what the trend is. And if some new sport has been invented that everybody in hang gliding is leaving hang gliding to go, discover jetboarding or something, then all of a sudden you're going to know about it before other people do. So finding something that you're fascinated with and that you know about and that you have an edge over other people is what's important. You've got to have an edge. It does not make sense to get involved in any kind of trading activity unless you have an edge over the masses. Otherwise, they're going to have an edge over you and you're going to lose in the long run. And so the question is, how do you find that edge? And I think it's very much about about your own life and your own interests and figuring out what fascinates you.
How do you think investing based on macro analysis have changed during your time as an investor?
Well, it's changed dramatically because, frankly, the investment world is a lot of labels and a lot of marketing and a lot of baloney. The macroeconomic analysis, what I mean by it when I think about it, is that approach that famous investors like Jim Rogers apply of figuring out what makes the world work. In terms of the macro hedge fund asset class that was extremely popular before the great financial crisis, really what was going on there was people had figured out that there was a long-term secular bull market in bonds, and all you really had to do was to use leverage to buy very safe and secure U.S. Treasury bonds with leverage, and you could make really huge returns without knowing very much about anything. It didn't require a whole lot of knowledge. It was just riding on a trend, and normally it's very hard to just ride on trends because when enough people find out about the trend, it stops working. There's too much money chasing it. U.S. Treasury bonds are such a big market that even when an entire industry was chasing on this long 10-year Treasury trade, just levering up 10-year Treasuries and knowing that it was very likely that yields were going to come down over the long run and that they would see price appreciation that would dramatically outperform the actual interest that they were being paid on those bonds. That very simple strategy worked so well for so long that so many people pretended to be smart when in reality they were doing something very stupid. And I shouldn't say stupid, they were doing something very simple. I don't know of any really simple things that consistently work to make money in this market environment. The only way to have edge is to figure out something that other people are not doing and identify an opportunity in the market that other people are not seeing. And this is very much a result of intentional government policy. They have tried to reduce the interest rates and yields that are paid on government securities in order to encourage people to take risk and invest in other segments of the economy, trying to stimulate economic growth. And it makes the game a lot harder for investment managers. So I think the way that the macro landscape has changed primarily, and when I interviewed Hugh Hendry, he told me the same thing. It's the simple trades. It used to be that you'd go work for a hedge fund on Wall Street fresh out of school. You'd learn what the key trades are that they're putting on, and you'd say, hey, this is easy. Anybody could do it. And you go launch your own fund, and your fund is successful because it really was pretty easy to just follow a certain recipe of easy trades. I don't think there's any easy trades anymore. The people who are really, really smart and can see and have insight to see what's going on and what's driving the economy in a way that most people can't see are making a killing. But you've got to be much smarter than you used to have to be in order to be successful in macroeconomic investing.
Let's move on from talking about investments to the future in general. Do you think a lot about the future? Do you actively plan for the future? And how do you think that's working out?
Yeah, I think, I think more than anybody probably about the future. I think it's almost an obsession of mine. And it's something that it puzzles me that the way that our government structure works, nobody is motivated or incented to really be concerned about planning a good future. Governments will tell you that's what they're doing for us, but it's nonsense. There is no incentive for a politician to be able to anticipate and prevent a crisis from occurring because they don't get any political points for that. They want to be the guy who's there when the crisis occurs so that they can take credit for looking for a solution. And I think that the world's in a very difficult place. We have more and more hostility. There's this generational cycle that I'm very fascinated with, which is Neil Howe's work that we've talked about before. That tells us that we're right now, in kind of the bottom of an 80 to 100 year cycle. The last time that we were at the bottom of one of these cycles was the Great Depression and World War II. The time before that was the Civil War. The time before that was the American Revolution. The time before that was the French and Indian Wars. So each 80 to 100 years, you have one of these fourth turnings, which is a time in history where faith in large institutions is lost. The public becomes dismayed. You tend to have extreme leaders in these circumstances. People are willing to vote for extreme politicians because they're so anxious for change. They're sick of the status quo that they're willing to try just just about anything. And we've certainly seen that regardless of what your personal view might happen to be with respect to American politics. You've got to agree that Donald Trump and Bernie Sanders are very different extremes. We're in a mindset where people are voting toward extremes. In Europe, you have Brexit and now other countries seriously questioning their commitment to the European Union. I think eventually you'll see a serious question around commitment to the euro currency. And, this is a time of major change in the world. So I try to be optimistic, but I think that we're in a time in history when a whole lot of really big things are going down. And I am very, very concerned at how complacent people have become. When I was a little kid growing up, it was kind of the end of the Cold War, but everybody was just so worried about what if Russia dropped a bomb on us and there was a nuclear war. It was something that the average person was thinking about a lot. These days, nobody thinks about that, and I think we have greater risk of a geopolitical escalation to outright nuclear war. I think it's more likely right now than it was at any time during the Cold War, but it's not something that occupies public consciousness. I mean, just look at the situation that's going on with Syria and, Russian and American forces not quite shooting directly at each other yet, but taking opposite sides in proxy wars. This is very, very dangerous ground, and I don't think most people take it seriously enough.
I think one thing that really influences that, at least when you go back and you look at, for example, the Cold War, was the fact that you had radio and TV, and you had a sort of a central distribution system for it, where everyone was plugged into the same information sources. Now everyone is into, part of it, everyone is part of kind of the global gossip, so to speak, but at the same time, everyone is plugged into their own little niches in social media, podcasts, YouTube, and so forth. So it's more unlikely that certain things spread to a critical mass where it becomes part of the world gossip, I think, which makes kind of everything more random, more complex than maybe it was before. Do you have any thoughts on that?
Well, I think that's part of it, but honestly, I think that we've had, and I'll speak only for the United States that I have personal knowledge of. I can't speak to Europe, but I think there's been a major breakdown in education. I think the quality of public education has deteriorated very, very badly. And I remember when I was a kid studying history and trying to understand what communism was and what socialism was and what capitalism was. I thought that the kids I remembered from the third grade understood those concepts better than most adults that I've met in the millennial generation. And I certainly don't mean to blame the people in the millennial generation. The things that we were taught in public school, they don't teach in public school anymore. And we've seen a huge return toward a public attitude that favors socialism. And, I certainly support everybody's right to their own opinions. And if they disagree with mine, that's healthy and that's fine. But I find that there's people who are very much favoring socialism because they are very fed up with their perception of capitalism. And I don't think in many cases they really understand what these words mean. What do you think capitalism means? And what do you think socialism means? How are those ideologies different? And why is it that you favor socialism? Well, because I'm sick of the way things are going in this country. Okay, that's not really an answer. That's a frustration. Have you spent the time to understand and read about and learn about the history of these two different political ideologies? No, in most cases they haven't. And I don't, claim any superiority over younger generations. They made us learn that stuff when I was a kid. I don't think that that's part of the educational curriculum the way that it used to be. And I think that we've reached a point, and maybe part of it too is there's now so much between the internet and, when I was growing up, there were only 3 TV channels. That was it. These days with cable, there's 57 channels and nothing on, and you've got the internet and blogs and podcasts and everything else. It's very easy to grow up and not learn anything if you don't happen to have a personal interest in learning something. And I think that, at least in America, kids are growing up and graduating from high school without any real knowledge of the world at all. And I think that particularly in the United States, the ignorance that I see of, people people who are angry at foreigners and have no idea why. What do you mean you're sick of foreigners? Well, all this crap going on in the Middle East, we ought to just bomb them some bitches. Really? Is that a way to solve a problem? The ignorant attitudes that have become so pervasive in society, it feels to me like we're just dumbing down society and it's getting worse over time. I don't know exactly what the drivers are, but it feels to me like we're headed into some pretty dangerous territory.
I agree a lot with what you're saying and really resonate with it. And I think almost underlying in what you're saying is that people are mistaking capitalism for crony capitalism and the lobbying and everything that comes with that. And I think kind of as a trend going forward, it seems to me like over the past 10 years, network effects have become a much bigger ruling part of the economy in terms of distribution of wealth. And I don't see that stopping anytime soon. So I believe that distribution of wealth is just going to keep getting even more skewed. And as a result of that, probably socialism will the motivation to believe in socialism will just get stronger. That's something that I believe. Have you thought about this?
Yes, I agree completely. And I think that the mechanism that underlies all of this is that human beings are very, very good at intuitively sensing injustice. When they know something's wrong and they know they're getting screwed over, they get pissed. They're not so good at really understanding the cause and effect and knowing the difference between capitalism and crony capitalism and socialism and communism and so forth. What they're feeling is, I know what's going on right now around me is unfair and I'm sick of it and I want change. I think it's the reason that Bill Clinton was so successful as a politician. For all of his presidential campaigns, he never had a position on anything. All he said is vote change, vote change, vote change. You vote for Bill, you're voting for change. People wanted change so badly, they didn't even take time or interest to find out what kind of change he was talking about. If he wanted to change the way it was, that made him happy, and he got a huge amount of votes that way. And I think that we've reached a point in society where people are absolutely justified and correct to feel that something is wrong with this society. The way that the world works is unfair. The distribution and the wealth inequality is crooked, and I don't understand it. I don't know what it is, but I know it's wrong and I want it changed. That's what's going on. And what happens is people who don't really know very much about different political ideologies and so forth, well, socialism seems to piss off everybody who's older than me that created this system that we live in now. So whatever it is, it must be good. And I think that's kind of the logic is, in reality, what we need to do is move away from what we have now in favor of capitalism, which is something we haven't had for a long time. People don't understand it that way. They think capitalism is what the problem is now. And what we need to learn to do is be more articulate and acknowledging, yes, what we have right now is corrupt and needs to go away. But going and saying socialism is the answer without understanding what socialism is not the solution.
I think this widespread frustration and general sentiments of injustice in society, I think that's a very explosive base for the fourth turning. So what are your current thoughts about the fourth turning? Do you think about specific institutions that you think will be taken down and other specific institutions that will be stronger?
I think that the really big, well, first of all, we should, for any listeners who don't know what we're talking about, Neil Howe's generational theory in the book, The Fourth Turning, is just a must read. It's really fascinating. The thing to understand about all of this injustice and what's going on in the world is it's not the first time. This happens about once every 80 years, and it always goes down the same way, and it's driven by the same generational cycle, and it's really fascinating to understand what drives that cycle. The book to read is The Fourth Turning by William Strauss and Neil Howe. As far as where we are here, I think the really big institution that is in the crosshairs right now is U.S. dollar dominance over the financial system. Now, most people don't understand it that way. If you talk to young people that are frustrated, they'll say, well, capitalism is the problem. We're sick of banks. Occupy Wall Street. They know that there is an injustice in the world. They're not sure what it is. They're reaching for something. I think that as far as what's really at risk of changing is the global reserve currency, the currency which central banks prefer to have their reserve assets denominated in and which we use for international trade settlement. There's a theory called Triffin's paradox, which says you can't have the same reserve currency last indefinitely because as soon as you get reserve currency status, it basically gives the issuing government a license to borrow and spend beyond its means until eventually that currency system is no longer suitable as serving as the reserve currency. And Robert Triffin predicted all the way back in the 1950s and 60s that eventually the U.S. dollar would not be able to keep its reserve currency status because the government would spend and borrow beyond its means too much for too long. I think we've finally reached that point with the U.S. moving beyond 100% debt to GDP ratio. And more importantly, in this time of increased nationalism and very strong action between countries and very strong political attitudes, we've got the United States weaponizing the U.S. dollar as a coercive tool of foreign policy, which is really not a cool thing to do. So what they've done is you've got the United States imposing unilateral sanctions on Iran, saying, we don't want to be part of this nuclear deal, which we agreed to. We're backing away from. I think that means defaulting on an agreement that we made. We're not going to honor it anymore. Iran, you're a bad guy again because we changed the president of our country, even though you didn't really do anything different since that treaty was signed. Our new president doesn't like it anymore. So we're out. And oh, by the way, that means all of you companies in Europe Iran has not been sanctioned by the United Nations. It hasn't been sanctioned by any European nation. You companies in Europe, we, the United States, are telling you that you're not allowed to do business with Iran anymore. And companies in Europe are saying, what do you mean? We're not breaking any laws. The United States doesn't have any authority to tell us we can't do business, oil business with Iran. Iran is entirely in good graces with our government. Just because the United States doesn't agree doesn't mean we have to bow to your wishes. The United States responds, and this is amazing, by withholding access to the SWIFT payment system. Now, it makes it sound like the SWIFT payment system, which is basically the world's global international wire transfer network, must be owned by the United States government because they're withholding access to that mechanism, which really is the keys to accessing the global financial system. Iran's not allowed to use it anymore. The crazy thing is the SWIFT system is owned by a Belgian consortium. It's based in Europe. But when SWIFT tried to say to the United States, look, you don't have to deal with Iran, but we're going to continue dealing with Iran, the Senate Banking Committee passed a resolution to invoke sanctions against SWIFT itself. And they bowed to that and said, okay, we'll play ball. We don't want to upset the United States. And what's happened is we've just this week seen, and this is amazing to me, at the United Nations in New York City, you've got the European Union's head financial or foreign policy chief standing shoulder to shoulder with the Iranian foreign minister, showing solidarity and speaking against the United States for its abusive policy of being reserve currency issuer to control access to SWIFT, and saying the European Union is committed to creating a new payment mechanism to bypass SWIFT to allow European companies to continue to do business with Iran, because Iran has not violated any sanction other than the unilateral sanctions imposed by the United States, which the United States doesn't have any authority to try to enforce against anyone other than its own citizens. And the United States is saying, no, we're America. We're in charge of everything. You're not allowed to deal with Iran. We're going to tell European countries or companies in Europe, regardless of what your national government says, we're going to tell you what we're allowed to do because we're the United States and we can get away with it. That kind of attitude is leading to a lot of resentment around the world. And I think that it's eventually going to get to the point where the rest of the world says enough and steps away from the U.S. dollar as the central component of the financial system. Now, the global financial system is so dollar-centric right now, it's going to be a major, major change. And this is actually, I'm writing a book about this subject, so I have a lot of passion for it. I think, believe it or not, that even though cryptocurrencies, as they were originally conceived, are probably not going to have too much of a life because eventually governments will figure out what they are, they invented some really cool technology along the way. Double spend-proof digital cash and distributed ledger are fantastic technical innovations, and they paved the way for someone to create a global digital currency system, not a cryptocurrency, but a government-sponsored digital currency system, which is introduced for the express purpose of replacing the dollar with something else. Now, 10 years ago, you never could have had that conversation because nobody on earth was interested seriously in replacing the dollar. We've reached a point where the United States has alienated enough people around the world. It started with Russia and China. Well, okay, Russia and China don't like U.S. U.S. policy. What's new there? No surprises. First, it was Germany last month, and now the EU foreign policy chief standing shoulder to shoulder with the guy from Iran at the United Nations saying the United States is the problem. We're going to find a workaround. These are very rapidly changing times in the world. And when the dollar stops being the center of the global financial system, unfortunately, I predict it's going to lead to a whole bunch of very serious knock-on effects and consequences, and it's going to make the world a more dangerous place.
And what was this called? The Tristan hypothesis?
Triffin paradox.
Triffin paradox. Okay. And what's the working title for your book?
The working title for the book is Beyond Blockchain: The Death of the Dollar and the Rise of Digital Currency. And it is not another cryptocurrency book. What it says about cryptocurrency is the crypto guys invented the technology that has the potential to play a very important role in changing the world. I don't think, and incidentally, just to give the crypto guys to acknowledge their view, they think cryptocurrencies themselves are going to evolve to the point where they will compete with major national currencies. People will like cryptocurrency better because it's a better form of money in many respects, and that's going to result in the world abandoning government-issued money and using cryptocurrency instead. Honestly, I think that's a wonderful sounding but very unrealistic pipe dream of a lot of crypto miners who thought they got in on the ground floor of something that could change the world. The world is controlled by governments, and as soon as governments figure out that cryptocurrency poses a very serious threat to government-issued currency, they're probably going to outlaw cryptocurrency, which is, it's another myth. People say it's impossible to outlaw it, and that's just not true. It would be difficult to ban the existence of the Bitcoin network, but it's very, very easy to outlaw the conversion of cryptocurrency into fiat currency in either direction. Once you've done that, you've effectively outlawed the use of cryptocurrency. So I think that what's likely to happen is digital currency technology, double spend-proof digital cash and distributed ledger are going to be used probably by, it will start with Russia and China designing something which is a new currency system that will be digital, trying to sort of ride on the popularity of cryptocurrency, but it's government issued and it's designed from start to finish for the purpose of challenging the dollar's hegemony over the financial system. And the digital technology offers the opportunity to do all sorts of things that were not possible with conventional currency systems, including the creation of a superior digital sovereign bond market, which I predict is going to make it possible to really change and re-level the playing field. And unfortunately, when this occurs, I think it results in a space race where the United States figures out what's at stake, and all of a sudden the race is on to see who can control the digital currency system of the future. And whoever wins that race probably has reserve currency status for the next 50 years. I don't think the U.S. government's doing a very good job of taking this stuff seriously. But if you look at what Russia and China are doing, they're on it. People tell me I'm a conspiracy theorist to say something like Russia and China might be working on a digital currency system. Well, that's crazy talk. Really? How come the People's Bank of China is actively advertising, and has been for more than a year, that they're aggressively hiring blockchain engineers? And how come they're so quiet about what these people are working on? How come Sergei Glaziev, the Russian scholar who is now an official advisor to Vladimir Putin and who is known as the father of this de-dollarization campaign, is giving keynote speeches at blockchain conferences in Europe? And how come both Russia and China have been aggressively accumulating gold for the last few years? It's circumstantial evidence, but it all plays into a story that they may be working on a digital currency system that is designed for the purpose of displacing the dollar as the world's global reserve currency. And, whether or not that's already happening, I'm convinced it's going to happen. And we're going to see a battle, and the battle is over who controls the world's global reserve currency, which has been the dollar since 1944. I think that's going to change in our lifetimes, probably in the next 10 to 15 years. And it's going to be a very important battle. Most people in society won't understand it because they don't understand what a reserve currency is or why it's so important or how much benefit the United States government derives from having that status. But I think that's where the battle is going to be fought for the next several years. And what the global monetary system looks like is really going to have a lot to do with the balance of power in the world.
Is the book finished?
That's funny you should ask that. I just finished the first pass of the book, and the last chapter is done. It's a little longer than I want. I've got to try to edit it down. I'm over 100,000 words right now, which is upwards of 300 pages. And usually when you write a book, it's my first book, so I can't say from great experience, but you start by writing the whole book through and you front to back, and you step away from it and you come back and read it and realize you want to change things and rewrite this chapter and add a chapter here and take away a chapter there. So I don't know how much is left to do, but I just finished the first draft of the manuscript, and it's long, but I think it's a really good read.
I've heard that when you think you're 80% done, you're actually 20% done when writing a book the first time.
Well, I think I'm 100% done, so I guess that means I'm only 10%.
Yeah. Can you say something about the process of writing the book? Have you followed a special method in writing, like 500 words every day, or how have you done this?
Well, this is a story which for me goes back more than 20 years. What I have done is wanted to write books and been talked out of it because every author I've ever known has lamented about, how much work it is. That's bullshit. It's not that much work. What it is true is it requires a lot more personal discipline, self-discipline, than most other undertakings in life. And you have to control your own commitment to the process. I've wanted to write books for 20 years and never have because I talked myself out of it, or other people talked me out of it by saying how much work it was. Once you commit yourself to it, it's not as much work as it sounds like. And it's been very rewarding for me. I am looking forward to writing more books because I've got about 5 or 6 of them in my head. And I've had them in my head and I've thought, everybody's always told me how much work it is. It's not that much work. You just have to make yourself commit to a schedule and do it. In this case, I shut down my hedge fund this year. I have more time on my hands and I was able to just sit down and spend most of my time doing it. So I've written it very quickly. I think it's likely that, as you say, there's that 80-20 rule where I think I'm more than 80% done. Maybe I'm less than 20% done. I need to step away from this and really think about the flow of the chapters and whether it needs to be rewritten. But I found it to be less work than I anticipated and people had led me to believe, and much more rewarding. It's a very different experience, having been involved in podcasting for many years. When you tell a story in a 45-minute podcast interview, there's really only so much story you can tell. If you're writing 100,000 words in a book, you can take the time to really introduce a lot of background concepts in detail and explain how things work and prepare your audience to understand a much more sophisticated conversation. So I don't think we could do the subject of the book in a podcast because there's not enough time to cover all of the background material and subjects, things like Griffin's paradox that you need to really understand before the rest of it all comes together. Having the ability to take as much time as I need to lay out all the ideas has been really refreshing to me because I don't usually get to do that. And I've quite enjoyed it. So I'm looking forward to more books after this one.
When do you plan to publish it?
This is the craziest thing. I'm actually speaking this afternoon with one of the biggest publishers. The world of publishing has changed. And it used to be that all of the publishers, when the manuscript is finished, completely done, no more changes planned, that's it, they'd spend a whole year after that before the book would actually hit the bookshelves. And what they were doing for that year is a mystery to me. That is still true today for most of the publishing industry. There are a couple of publishers that bring that cycle time down to only 4 or 5 months, and they're so proud of themselves because it's only 4 or 5 months. I just think, wait a minute, you can self-publish on Kindle Direct Publishing in 4 or 5 minutes. You just upload a PDF file and click OK, and you're published. And the thing is, self-publishing kind of has a connotation, that you don't have a name behind your book of a publisher. It sounds like you couldn't get a publisher. And what I'm struggling with right now is I could, and I don't think I'm really done with the manuscript because, as I said, I want to take a step away from it and redigest it and see if I need to reorganize it. But I've got a finished manuscript right now, even if it's only a first pass. If I wanted to publish this book and get it out next week, you can do that with self-publishing these days. And if I do it through a conventional, it's called a trade publisher, it's a minimum of 6 months before the book is out. The advantage they give you is they can put the book on bookshelves bookshelves in brick and mortar bookstores. And you can't do that with self-publishing. You're just on Amazon and other electronic platforms. I didn't even know they still had bookstores, but I guess a lot of people still use them, and it's an important part of the market. So I'm trying to learn more about it, but whether or not I expect to be done with editing this book within a month at the most, probably within the next few weeks. Whether it gets published in minutes after that or in many months with a trade publisher kind of depends on what they have to offer.
Well, you definitely have an audience for it with your podcast and everything. So I'm sure you can put as many ideas as possible in it compared to someone who just has to, like simplify their thoughts too much because they want to hit like a mainstream audience.
Yeah, and it'll be very interesting to me. The cryptocurrency books have been super popular, and I think that's the reason the publishers are very excited when I talk about digital currency. I'm trying to get them to understand this is not a book about cryptocurrency. This is a book about why cryptocurrency was a catalyst that invented technology that'll be used in completely different ways to achieve something far bigger and more important than cryptocurrency ever was. Does that mean that I'm the guy who's got the really cool insight that nobody else is thinking about that's going to create the best-selling book? Or does that mean that I'm some weirdo talking about reserve currencies and Triffin's paradox and global what? I wanted to figure out how to mine Bitcoin on my gaming rig. What is this book telling me? I don't know how it's going to go. I don't know how a book like this will be received, because it will definitely be marketed on the search engine optimization power of the buzzword blockchain. But the story is beyond blockchain. It's what happens next after blockchain, because I don't think blockchain's that interesting. It'll be interesting to see how it's received.
We originally had planned to talk a lot more today. We have a lot of topics that we haven't touched upon yet. But we already before this we discussed talking to you again when the book is done. So I think in the interest of time we try to wrap it up now. And I'd like to finish off with the topic of how do you think a young person should actually go about preparing for the future? What should he focus on? What kind of skills and what kind of mindsets should a person foster?
I think the most important things to understand, first of all, is unfair as it seems, the things that are going on politically in the world. Everybody goes through this in their life. Everybody has to live through a period of the world being a really screwed up place. It's a question of what age you go through it at. If you're going through this if you're a young person right now, it's like being a young person during, the World War II period. The bad news is you grew up through some really difficult economic times. The good news is that, the recovery period that most of your adult life will occupy will be better times. So you've probably got several more years, the next 5 to 10 years of this fourth turning playing out. Certainly by 2030, it'll be over and we'll be headed back toward, from a cycle perspective, much better times. So don't let yourself get down that it seems like the world is really, really screwed up. It is really, really screwed up, but it happens in cycles about every 80 to 100 years, and we're at the bottom of a cycle right now. It's going to get better. The way that the economy is changing is that all of the jobs that used to go to middlemen, which was most of the economy, are not going to exist anymore. So you don't want to be a broker, you don't want to be a realtor, you don't want to do things that are middleman jobs. What you do want to do is learn as much as you can, and I think that's another book that I want to write. I think that we're going to see a change where learning and skills and knowledge become more important than they ever were before, but formal university degrees become less important. So I would encourage you to think about how to commit yourself to a lifetime of continuous learning in the things that fascinate you and interest you. Don't worry quite as much about the importance of a university degree. University degrees will still be important for several years to come, but I think that over the course, if you're a young person now, by the time you're my age, university degrees won't be nearly as important. We'll have other ways of organizing education to recognize people for their knowledge and capabilities independent of the university degree system. So I would encourage, and I think that, the biggest thing that I've learned in life has really been about self-discipline. Most people go through life doing what they have to do. You have to do whatever the school tells you have to do in order to graduate, and you do no more than that, and then you're done. done, and you breathe a big sigh of relief and don't do anything else until you have to do it. If you live your life that way, you're not going to be happy. If you live your life by taking charge, being in charge of your own life and saying, where can I create opportunity for myself by taking initiative and going and finding the things that I want in life and not being constrained by what society tells me I'm supposed to do, but doing what I want to do and investing the energy and effort into advancing myself, not to earn some stupid piece of paper degree from a university, but to learn about new things that you don't know about yet that better enable you and empower you to be effective at achieving your personal goal. That's the way to think about life. And I think that, frankly, the formal education system that we have conditions people to just do what's necessary to earn the piece of paper, to earn the degree. Get out of that mindset and think about focusing that energy on learning useful things, which, by the way, universities don't usually teach.
I really think you should bump up your plans for writing that book to as soon as possible.
Maybe when next time we do an interview, we'll talk about the 5 books that I'm trying to decide which one is the next one to write. The one called Fixing Education is the most important one for sure. The thing is, I'm thinking that maybe I need to build my reputation as an author because I don't want to sell that one. I want to give it away, and I want it to become a worldwide bestseller that changes the world. I don't think I have a big enough reputation to do that yet. So I'm kind of saving that one until I have a better marketing platform. But we should talk more about it next time we do an interview.
All right. Ludvig, do you have any final questions?
Well, this is a big question, but if you could give just a short answer, it would be really good. And it is that as a software entrepreneur and investor dealing with a lot of technology and complex patterns, how have the last 20 years, or rather what in the last 20 years have surprised you the most?
Wow. That is an excellent question. The last 20 years, what surprised me the most, I guess one of the things that has really surprised me as a trend that I don't think most people are talking about is there's been a huge change where people are getting away with breaking the rules much more than they used to. Take a look at Uber. Now, it's not a public company, but it's a big enough private company that all of the same effects occur where, people that are managers worry about their personal liability and so forth. Everybody normally running large businesses is trying to cover their own tail by not getting in too much, never doing anything illegal or anything that could come back to bite them. At least that's the way business used to work. Uber breaks the rules in most of the markets that they go into. There is no ride-sharing legal structure. They just start operating. And in many cases, they have been outlawed by entire countries. You're not allowed to operate a internet, smartphone-based ride-sharing service in our country. It's illegal. And Uber says, oh yeah, how are you going to stop us? And keeps going and doing the same thing. So to see large businesses just breaking government rules and doing what they want to do because they can get away with it is fascinating to me. At the same time, things like cryptocurrency. If you'd asked me when cryptocurrency was invented, I would have said, if you asked me about it in 2009, I would have said give it 2 to 3 years tops before it's outlawed. Governments have been incredibly slow to figure out what it is. And this is something I'm writing about in the book, so I have some specific knowledge examples of it, and I'll save it in the end because you asked me to be brief. There's a lot of ignorance in government. They don't understand what cryptocurrency is. They haven't outlawed it because they don't know what it is yet. So it seems like a lot of people are getting away with breaking the rules, and I think it's part of this whole world turning phenomenon that more and more people in society who used to be committed to, hey, we have to follow the rules of the government, they're realizing the government's pretty corrupt and they don't respect the government and they do what they can get away with as opposed to what they're supposed to do. And I think it's a societal attitude change that I would not have expected.
And then I think a complementary advice to young people would be to do as everybody else is doing and break the rules, break more rules than you would think before.
Well, especially the one that has to do with you have to go to university because your parents told you to. In your parents' day, that made a lot of sense. University is overpriced now, and it's a function of the public financial assistance that has bid up the cost of university education. You get a lower quality education from university for a much higher price. It's not worth it, and you can do a better job of educating yourself. The problem is most people don't do that. They use that as a rationale to not go to university because they don't want to do work, and they don't do anything to educate themselves. If you have the self-discipline to ignore university but spend the same amount of energy learning useful things as opposed to the nonsense they teach in university, you will be much better off. Most people don't have the self-discipline to do that, unfortunately.
All right. I've learned a lot from talking to you today, Erik. So I want to thank you for that.
Yeah, thank you so much for being on the show. And where do you want us to send our audience? To Macrovoices Podcast, of course, which is a show that I absolutely love, and I listen to it religiously every week. But do you have any more places you want people to go?
No, for the moment, the new book, I'm debating whether it's going to have its own website or not. It was originally, the working title was Beyond Crypto instead of Beyond Blockchain. So I've already paid for that domain name, and Beyond Blockchain's already taken. So I don't know what the new website might be. For now, macrovoices.com is the way to follow me. It's a weekly podcast. It is for more sophisticated and experienced investors, so it may not interest everyone in the audience, but it's a way to follow me, and I look forward to doing another interview when the book is done.
Yeah, and I also want to stress that anybody who listens to Macrovoices really should sign up for the Research Roundup letter. It's a free resource. It's really free, and there is no spam, and you actually every week get a handful of very useful links to articles, charts, a lot of very useful stuff that's actually for free.
We should get you to do the show wrap at the end of Macrovoices. You're better at selling that than we are.
This episode has been sound edited by Alexander Martin. Thank you, Alex.
Don't forget to subscribe to our newsletter where we send out weekly summaries. You can check it out at www.futureskillspodcast.com.